welcome to our today's lesson, Financial Management Level 3. Lesson 3 is based on the wages, the preparation of the wages journal. A wage is an earning that can be for hourly or daily or weekly and also fortnightly. Then we have to prepare the wages journal for the organization. In most cases, if you check all the previous question paper, we always prepare the wages journal for a week. Then we have to know how to prepare that wages journal. Then remember your subject. They provide you with an answer sheet that have got column. You have to know how to enter the information on that particular column. Then on our wages journal, firstly, before we can start doing the exercise, our first column, we have to enter the name of the employees, because this is like the wage sheet of the whole organization. It is not an individual pay slip. It's a pay slip that involves all the employees. You firstly enter, you list the employees. Then each and every organization have got the normal time. Sometimes, in most cases, they stipulate that all the workers are supposed to work 40 hours a week. You find that there are employees who work beyond that. Then if there are employees who work beyond the normal hours provided as stipulated, those hours falls under overtime hours. We do have the rate for normal time that this particular employee earns so much per hour for normal, and also the rate for overtime if that particular employee managed to go an extra mile work overtime. He or she earns so much per hour. Then, after entering the list of the employees, you have to go to the normal time. You must firstly check all the employees worked the stipulated hours. Because if they said they have to work 40 hours, you find that another employee worked 37. You have to enter 37. You need not to enter 40 as the company, all workers have to work 40 hours. Then you enter the rate per hour. Then to calculate the amount, you have to set the hours multiplied by the rate, then you determine the amount for normal. Then for overtime, if that particular employee worked beyond the normal hours is overtime, you have to enter the number of hours have worked, you enter the rate for overtime, then you multiply the hours by the rate, you get the amount of the overtime. Now, if the workers have worked overtime, that means currently we'll have two amounts. The amount for normal time as well as the amount for overtime. If we go to the gross wage column, you have to add the amount for normal time and the amount for overtime. It gave us the gross wage. You don't add the rate or the hours, but you only add the amount of normal as well as the amount of the overtime. It gave us the gross wage. Then a gross wage is calculated by adding the amount of normal time and the overtime amount. Then if they start explain what is a gross wage, it's a wage before deduction. Then this is a wage before deduction. An employee is not supposed to budget on the gross wage because they have not yet deducted all the deduction the employee can have. The employee is supposed to do a budget on the net wage, as the net wage is a wage after deduction. Let's go to the deduction. Firstly, we've got the pension fund. This is an amount that they deduct to an employee during the time he or she is working. Then after the contract expired or he retires or she retired, he gets the pension pay. It's not the pension that is earned by our old grandfathers or grandmothers. It came from the company. Then the Unemployment Insurance Fund, the UIF, stands for Unemployment Insurance Fund. Long ago, our parents used to go to the farms. Then after they have retrenched them, you used to hear them saying, we are going to collect our blue card. They collect it to Department of Labor, the UIF. Then the medical aid is an amount that they deduct from the employees each year, like the government employees, most of them now, they do have EGMs as a medical aid. They help the employees when they are not feeling well to go to the doctors. Okay, the next deduction is our pay-as-you-earn. This is an income tax that is paid to South Africa Revenue Service, shortly SARS. They always deduct the pay-as-you-earn to each and every employee. Then the employer sent the pay-as-you-earn to Department of SARS. This is the amount for South Africa Revenue Service. Then the next one is our total deduction column. That means total deduction column, we have to add all the deduction. We start from the pension plus UIF plus medical plus pay-as-you-earn. It gave us the total deduction. This is the amount that, the total amount that is deducted to each and every employee of the organization. Then the net wage. A net wage is a wage after deduction. We calculate it by saying the gross wage minus total deduction. It gave us the gross wage, the net wage. Remember, the net wage is a wage after deduction. This is the wage, the income that reports to our cell phones nowadays, that we have to make a budget on. Okay, then followed by the contribution by the employer. As every organization used to contribute for their employees for the pension, the UIF, and the medical, except the pay-as-you-earn. Because each and every employee is supposed to pay for himself the pay-as-you-earn. There is no contribution by the employer for the pay-as-you-earn. Okay, the contribution by employer, they indicate to each and every exercise that in the case of the pension, the employer contribute how many percent on behalf of the pension, and also in the case of the UIF, and also in the case of the medical aid. Then you have to add all the contribution by employer. Okay, let's go to the exercise so that we can see how to prepare the wages journal. Then here we have been given an exercise. I've extracted it on one of the previous question papers for 2015. They said FJN Enterprise make use of a wages journal to record the remuneration of employees. Start the information below and complete the wages journal for employees in the answer book. Do not total the column of the journal as no posting is required. Before you can start entering, you have to go through all the exercise so that you can know what entails in the exercise. Then the employee's normal wage is 40 hours. All the employees are obliged to work 40 hours. The 40 hours is for normal time. Then the overtime rates, if the employee have worked overtime, there are rates. We've got 2 employees as Mbete. The rate for overtime is 120 per hour. G. Adams is 135 per hour. These are the rates for overtime. Then the normal rate for Adams is 90 rand. Then as Mbete is 80 rand. Then these employees have worked 55 hours for Adams, then 51 hours for Mbete. That means they do have the hours for overtime. They will also earn the overtime amount. Okay, deduction. For this deduction that indicates the dependent is the medical aid. That means medical aid, you contribute according to what the number of dependents that we are having. Okay, G. Adams is married with 2, as Mbete is single. Then they said, in the case of the medical, those who are single is 50 rand per week. Married with 1 dependent is 63 rand per week. Married with 2 dependent is 75 rand per week. Then for the pension, all the employees belong to Pillar Pension Fund, contribute 7.5% of employees' wage for normal working hours. Remember, you must not add there on 7.5%. You have to know which amount are you going to use to calculate that 7.5%. As we have got the normal amount, we've got the overtime amount, we've got the gross wage. Here they said the 7.5% has to be calculated using the normal amount. Then the income tax is calculated at 18% of gross wage after deduction of pension, or 18% of the taxable income. Some examiners used a taxable income instead of highlighting what is the taxable income, as a taxable income is a gross wage minus pension. Then you multiply by the given percentage to calculate your pay as you earn. Some examiner says pay as you earn is 18% of a taxable income. You must know that what is a taxable income? A taxable income is a gross wage minus pension. Then you get the taxable income, you multiply by the given percentage. Then the UIF is 1% of employees' gross wage for normal time working hours. Then we went to the employer's contribution. Pension is 1.50 rand for every rand contributed by employee. If the employee contribute 2 rand, the employer will contribute to 1.50 rand times 2. As they said, 1.50 rand to each and every rand. Then for medical aid is half employees' amount. That means the employer contribute 50% of the employee's contribution. Or they can either say the employer contribute half the amount of the employee's contribution. The UIF is 1 rand for every rand contributed by employee. Sometimes they can say the employer contribute the same amount contributed by employee, or they can either say the employer contribute a rand for rand basis. Okay, let's do the exercise. Then firstly, we have to list the employee. We've got S. Meta. Then the next one is G. Adams. We are done with this column. Then the next column is normal time. We have to enter the rate, the hours, and the amount. Then all the employees are obliged to work 40 hours. And as we have already gone through the exercise, we know that all the employees worked beyond. We have to put 40. All of them did manage to work 40 hours. Then the rate for normal time for Adams is 90 rand. For Mbete is 80 rand. This 80 rand is per hour, 90 rand per hour. He worked or she worked 40 hours. Okay, we have to multiply. Let's calculate the normal time amount for both employees. 40 hours multiplied by 80, the amount is 3,200. This is the amount for normal time. The second employee is 40 multiplied by 90. The amount is 3,600. This is the amount for normal time. Let's enter their overtime. Let's firstly check the hours. Adams worked 55. Where is Adams? Then he was supposed to work 40, but he worked 55. The over hours is 15. Then Mbete works 51. That means the over hours is 11. Let's enter the rate for overtime. The rate for overtime for S. Mbete is 120. For Adams is 135. Then let's calculate the amount for overtime. It's 11 hours multiplied by 120. The amount is 1320. Then the second employee, 15 multiplied by 135. The amount is 2025. This is the amount for normal. This is for over. If we add them together, it gave us the gross wage. Then 2025 plus 3,600 for Adams is 56.25. Then 3,200 plus 1320, the gross wage is 45.20. 4,520. Then we go to the deduction. You have to check which amount are you supposed to use. As now we've got three amounts: the normal amount, the overtime, and the gross wage. Okay, let's firstly check our deduction. Deduction are as follows. Single is 50 rand per week, married with one, as indicated there. Adams is married with two. And they said those who are married with two is 75 rand per week. Adams, the medical aid, it's 75. Then the next employee, Mbete, is single. They said those who are single is 50 rand per week. We have to enter 50 rand. Then we are done with the medical contribution. The next bullet speak about the pension contribution. It's 7.5% employees' wage for normal time. We have to use this amount to calculate the pension. Then we say 3,200 multiplied by 7.5%. Then the pension is 240 for the first employee. The second one, 3,600 times 7.5%. The pension is 270. It has been calculated using the normal. Okay, the next deduction is our income tax, the pay as you earn. Then the pay as you earn is 18% of gross wage after deduction of pension. I said you have to know that, as some of the examiners used to say, 18% of a taxable income. A taxable income is a gross wage minus pension. Okay, then our first employee, let's calculate the pay as you earn. The gross wage is 45.20 minus the pension of 240, then multiply by 18%. Then our pay as you earn is 770.40. If they didn't indicate that you have to round the cent off, you have to write the cent. You must have two numbers after a comma. Okay, the next employee is 56.25 minus the pension minus 270 multiplied by 18%. The pay as you earn is 963.90. Okay, let's go to the next deduction, the unemployment insurance fund. Is 1%. Even nowadays, UIF, the unemployment is 1% of the employer and the employee. And they said 1% for normal, not for over, not for gross wage, but for normal. Then the 1% of the first employee, you multiply 3,200 times 1% is 32 rand. The second one is 36 rand. 1% is not difficult to calculate. You can just enter the amount. Okay. Then we are done with the calculations of our deduction. We have to add them together to determine the total deduction. Then we must start adding, as you see, the deductions start from the pension, the UIF, the medical, the pay as you earn. It will give us the total deduction. Let's calculate. The first employee, 240 for pension, plus 32 for UIF, plus 50 for medical, plus 770.40 for pay as you earn. It gave us 1092.40. This is the total amount that is deducted to as Mbete. For the second employee, our pension fund is 270 plus 36 plus 75 plus 963.90. Then the total amount that is deducted is 1344.90. This is the total amount that is deducted to that particular employee. Then we have to calculate the net wage. Remember, the net wage, I've said, it's a wage after deduction. We said by calculating the net wage, we have to say gross wage minus total deduction. It will give us the net wage. Our gross wage for the first employee is 4520 minus 1092.40. The net wage is 34 or 27.6. This is the amount that that particular employee can budget on. Okay, the second one, the gross wage is 5625 minus total deduction of 1344.90. The net wage is 4280.10. This is the net wage for that particular employee. Okay, let's go to the contribution by employer. S, better, and G, others. In the case of the pension, they said the employer contribute 1 rand 50 to each and every rand contributed by the employee. You have to take the contribution by employee and multiply by 1 rand 50. Okay, 240 times 1 rand 50 is 360 for the first employee. The second one, 270 times 1 rand 50 is 405 for the second employee. In the case of the UIF, the employer contribute 1 rand for every rand contributed by employee. That means the employer contribute the same amount contributed by the employee. Is 32 for the first employee and 36 for the second employee. Then the medical aid. They said half of the employee's amount. They can either say the employer contribute 50% of the employee's contribution. The first employee contribute 50%. You can calculate half of 50 is 25 rand. Then half of 75 times 50% is 37 rand. 0.50. Then this column, you have to add all the contribution by the employer. You start from the pension. The pension is 360 plus 32 plus 25. Then for this employee, the employer contribute 417. Okay, for the second one, 405 plus 36 plus 37.50. The employer contribute 478.50. Then it is very much important to check which amount are you supposed to use. Because most of the learners used to make a mistake and take the gross salary, but the examiner says use the normal time amount. Then we have to check each and every deduction. Which amount are you supposed to use? This is our wage sheet for that particular organization. You must firstly know to calculate the normal time amount, the overtime. Sometimes on the exam question paper, they don't indicate the hours and the rate. They just said normal time. Then they put the amount. Then they said overtime, they put the amount. That means when I have to calculate on your side the hours and the rate, they give you the rate as well as the hours. You have to check that. Then you add both amount to give you the gross wage. And you must remember section A for true or false questions or match column. They can ask you what is a gross wage? A gross wage is a wage before deduction. Then after that you enter your deduction, the pension fund, the unemployment insurance fund, the medical aid, the pay as you earn. Remember, the pay as you earn even nowadays is calculated on the taxable income. You must not forget that. And the taxable income, it's a gross wage minus pension. That amount is a taxable income. You can calculate, take the percentage and calculate. Then if you add all the deduction, it gave us the total deduction. Then after that, you calculate the net wage by saying gross wage minus total deduction. It gave us the net wage. After that, we enter the contribution of the employer. They used to give you the information. How much percentage or how much money is contributed by the employer to its employees. That is the end of our lesson 3. That is based on the salary, the wages journal. Remember, the wages is an earning. It can be for hourly, or it can be for daily, or for weekly, or for fortnightly. But always, if we write the exam, all the previous question papers, they want us to prepare the wages journal for a week. Everything that you enter it on that on all the columns, it has to be for a week. I thank you. If maybe you've got the question, you can find us on our website, ehlanzenicollege.co.za, on Facebook, Ehlanzeni TVET College, on Twitter, @Ehlanzeni TVET, on YouTube, Ehlanzeni TVET College. Thank you.